Welcome back, everyone, to Mike on Money. My name is Michael LeBlanc, Director and Senior Portfolio Manager at Canaccord Genuity, and thanks for joining us again this week. Every Tuesday, of course, we take a dive into what's going on in the markets, and we talk about certain things that's going on. And this week, we're going to talk about investing in innovation, or sometimes you might hear me talk about it as disruptive technology. So technology that's changed in the way either we're doing things, the markets are doing things, or a sector or particular industry are doing it. So we'll take a deeper look at that after we take a look at the markets. As always, if you're watching us here, excuse me, if you're watching us here, just remember everything that we cover is for educational purposes only. Do not take it as advice or solicitation. Always do your own due diligence or reach out to us or a professional advisor for advice in regards to your current situation and how you might be able to apply some of these things into your portfolio or into your investment strategies. If you're watching us live, as always, you can click that Q&A button and ask us questions on here. We'll try to get to them at the end. If not, we will absolutely follow up with you. If you'd like, if you're watching this on a replay on the podcast, just go to mikeonmoney.com. There you can send us in any questions, give us a call, or even book appointments directly with me, and I can answer any of your questions on a one-on-one. So with that, let's dive into what's going on in the markets right now. So this week, we're waiting for the U.S. S&P CoreLogic case to come to head. Just one of those other cases that we're looking at from competitive competition rules. The home price index for January we're waiting for out of the U.S. Of course, the numbers here in Canada continue to move up as far as the housing prices go. Pretty much the same thing going on in the U.S. Not much change there. Really driven by those low interest rates. We're starting to see those borrowing rates anyway go up as we're seeing the 10-year bond in the U.S. starting to increase. So whether that's going to slow things down, certainly there's a lot of talk about a housing bubble in formation right now where the pricing are. And we're seeing a lot of people, young people, move out to the suburbs as they don't need to be in their offices anymore. They don't need to be in the down core anymore, as a lot of positions have gone permanent remote work. But we're also seeing a lot of I would say retirees, pre-retirees move into areas a little closer to their lifestyle as well. So it'll be interesting to see how the home prices continue to perform when we start to see those interest rates start to rise a bit. U.S. Conference Board Consumer Confidence Index for March is also coming out. Probably going to be a little weaker. If you've been following, of course, January and February were a bit stronger. We have seen a little bit of pullback in the markets as people become a little bit more concerned as a potential fourth wave, but also, as the vaccines do ramp up, especially in the U.S., and, more and more things open, that the economy, how quickly that economy is going to bounce back. Not to say it's not going to bounce back, but it's all about how quickly it's going to come back the pre-COVID levels or surpass those, given that the markets have surpassed the numbers pre-COVID. And of course, Canadian payroll employment for January, we'll look for those numbers as well. As we've seen in the last couple of weeks or a few weeks now, we have seen the markets, the overall markets a little bit shaky, especially in that tech arena. Not too much to be concerned about. Might be a buying opportunity. We're going to talk about innovation and tech plays a big role in that today, but not a surprise. We saw a big run up in tech last year. We talked about it all through December and January about the bit of overvaluations, of course, in the portfolios. That was a driver for a big rebalance we did to take some profits out of those and move into other areas that hadn't had such a big run up. And that's just, part of staying on top of the portfolio, staying on top of your profits and making sure, you pay really close attention to what those stocks are valued at, and whether that makes sense or not, and whether it's you should warrant any changes or trim it. Right? There's nothing wrong with taking a bit of profit out of a position. Doesn't mean that you need to get rid of it. So let's take a look at what's going on in the markets. Well, if we look at the American SPAC, so if you haven't been following this is big in Canada. In fact, I think they were probably more popular in Canada first before the US really blew them up. SPACs are what we call special purpose acquisition companies. Just to break this down, basically what they are is a group of investors will get together, create a company, fund it, so the investors will put a bunch of money into it, but they have no idea what they're invested into yet. Then that SPAC, the managers of that SPAC, will go out and try to find a good deal. So a company that wants to go public, a company that needs funding, and then they'll go and use the capital that's in that SPAC, fund that company, take those shares of that company into the SPAC, basically what we call an RTO, or reverse takeover. And then the SPAC gets rebranded under that new company's name. So the UK in London decided, hey, we're going to start doing some SPACs over here. Has not taken off as well. Quite frankly, I think these are, they did well in 2020 for sure. Previously, it was a hit or miss to 2020. I'm not a huge fan of the structure. I'm not a huge fan of investing without knowing what you're investing into. And then the structure of the SPAC does give a lot of control to the managing partners, if you will, the managing company of the SPAC over the company that's taking advantage of the capital. And so I sometimes, and not always, my sense is the company that's going into the SPAC isn't as good of acquisition as maybe you want it to be, because why wouldn't it just go direct to market? So good, bad, ugly, just do your due diligence on SPACs. I'm not saying they're all bad. Definitely pay attention to what you're investing into, the terms of the SPAC. So some of the SPACs give you an opportunity to take your initial investment out once they announce the company that's going in it. So if you don't like that, take advantage of that. Not all offer you that. And then usually when they first start trading, it's generally around the issue price, or the price you bought in at. So you can always get out if you don't like the underlying company that gets put in there. So just keep an eye on it. They were really hot through 2020. We are seeing them slow down here in North America as well, but they did not do well over in the UK. Exxon and Chevron, of course, you followed last year, merger there. They're taking a little bit of slow walk to the US shale recovery. And why not? The prices are starting to, firm up in the oil, but that's only because a lot of companies, of course, have turned off production or turned down production substantially to adjust for the current demand that we're seeing around the world. So to go on and turn on their shale oil fields to any large extent could disrupt those prices again. So they're just taking it easy. Two big balance sheets between Exxon and Chevron, so they can be patient with that and let oil recover on its own at its own speed. Traffic in the Suez Canal is resuming after the stranded ship was refloated. So of course, if you followed this in the news, and it was pretty hard not to, a big container ship, a giant container ship, in fact, a huge one, got spun sideways or almost sideways in the entry to the Suez Canal, blocking traffic both ways, backing up shipments. I think it got up to $400 billion worth of goods being backed up, and so far backed up that a lot of ships decided to go down around Africa to kind of the old route before the canal was built, because by the time they would have got through, even after the ship is moved because of the backup that it's created, they can get around there. I think it's a 12-day journey to get around the bottom of Africa there and back up. So So a lot of ships. So it has been moved. It was, I think it was 6 days. It was caught in there. There was a lot of funny internet memes and pictures showing them trying to get it out of there with bulldozers compared to the size of the ship. It was not a great situation, but it was at least not horrible news out there. Anyway, it has been moved, has been refloated, and now the process of moving all those backed up ships through the canal in a timely manner is now going to be the task. So shipments overseas, not so much in North America. Most of our stuff wouldn't go through there, but there obviously was some oil, especially through the Middle Eastern countries, that were delayed. But we should see things pick up pretty quickly now that it's reopened. There's talk of some inflation pressures on certain items. I know there's IKEA had a lot of shipments in there. So I think, again, mostly overseas, some shipments will be delayed or inventory will be delayed on certain products that were caught up in this. But we're past that, so hopefully they move through quickly. Biden is moving to explain the funding of the $3 trillion infrastructure plan. So we talked about this. This is under Buttigieg as transport minister, moving to a new innovative, probably good. We haven't got all the details yet of their infrastructure plan, and this is to, tackle their need for investment in their infrastructure, improvements, repairs. So $3 trillion, and they're talking about, making some shift. I mentioned last week that Buttigieg was talking about not expanding highways and roads in all cases. In a lot of cases, does it make better sense to invest into transit and move people off the road and reduce traffic? So a lot of new thinking, a lot of talk of more efficiencies in the investments into that infrastructure plan. But all in all, good. The U.S. has been behind in infrastructure investment, and infrastructure investment is a big way governments, rebuild economies because they're spending money through, obviously spending money in the economy, but also hiring people as they build out those construction crews. The Fed's Waller says the economy is a long way from rate hike. So this just goes back to the ongoing theme of the U.S. Fed and, of course, Bank of Canada as well, to not raise rates, the interest rates for a while. Again, they had that 3-year mark in mind. There's about 2.5 years left of that. We'll keep a close eye on that. The bond rates are kind of getting into that critical category. I still think by 2022, we're probably going to see a hike, but probably still safe for 2021. In Goldman Securities case, the U.S. Supreme Court wrestles over investors' class action. So a lot of these going on right now, but this has to do with publicly traded companies and fraudulent statements that keep the artificial prices or keep the stock prices artificially high. So there's a class action against Goldman Sachs over a few of the financial statements they put out on some of the companies, and whether those were errors or intentionally fraudulent that kept the stock prices higher, and we'll have to see as the evidence come out there. So the bad news. So COVID-19 update. So if you're like me and you live in British Columbia, we got thrown, I'm going to call it bad news. Maybe it's not bad news. I got deflated on this news that I was kind of hoping after Easter we would really start to see kind of restrictions easing off. Maybe I got my hopes too high. Of course, we did see, the numbers have been increasing. So, maybe I shouldn't have been so surprised here in BC. But of course, all food and liquor serving premises will be takeout, delivery, or patios only. And there's certain patios that qualify. It depends on how extensive the menu is. So some of the smaller pubs and brew pubs and wineries don't qualify. You can read more about that. It's all over the internet. Whistler got shut down as their numbers really increased So they're closed till April 19th, which is pretty much killing the rest of the ski season. I know Blackcomb stays open a bit longer than Whistler does normally into May, which it may reopen again, or what we saw last year when they closed Whistler with the pandemic. Whistler just closed shop because letting all the employees go for 3 weeks and then bringing them all back. We'll have to see. I've not seen anything out from Whistler officially yet. I saw something out from the community of Whistler, of course, being shocked and concerned. But that's going to obviously be difficult for that community. And any indoor adult fitness groups are closed. The gyms are closed. Religious gatherings are closed. So any of those things that we'd started to see reopening basically closed until April 19th at least. We'll have to keep monitoring the situation because, of course, we have seen in the past where these dates, do get extended. On the good news front, we are seeing the vaccine rollout expand. I was reading this morning, Canada is getting an extra or 5 million doses from Pfizer sooner. They did suspend the AstraZeneca vaccine for anyone under 55 in BC, just doing some more testing and some concerns. They said there's no danger. They just want to see the effectiveness, I guess, for those under 55. I don't think it's really centered around the clotting issue that they kind of cleared earlier on. But we'll see more as those tests continue. But the good news is we are seeing more and more shipments coming into Canada. So obviously more and more distribution. And of course in the US, massively stepping up their vaccination programs. Biden announcing last week that his original goal was 100 million vaccines by 100 days in office. He on day 57, they hit 100 million vaccines. So now he's shooting for 200 million vaccines by 100 days in office, which is great. Obviously, being close borders with us, the faster they're done, we can get done. Maybe we can start to reopen the borders again, maybe a little bit of travel, and of course, both economies benefit with our borders open a little bit more. So we'll keep a close eye on that. But it was a bit of a hit for BC residents anyway. I know Eastern Canada, some of our listeners over there, have been going through tighter closures than we have. But we were kind of getting used to what we had, and I think thinking that was going to open a little bit more. Anyway, we'll keep you all updated on that. So let's take a look at what's going on in the markets. On the U.S. front, the Conference Board survey is expected to show a rise in the Consumer Confidence Index. So this was an earlier estimate based on the last 2 weeks. I mentioned I'll be surprised if it rises as much as that they're looking at here. But we'll take a closer look once those numbers come out. And as I also mentioned, we're looking at the housing index, likely to have increased since January. As I mentioned, that's the trend we've seen in Canada anyway, so probably that's going to continue. And the Labor Board begins its hand count of approximately 5,800 votes on whether to form a union cast by the Amazon employees. So this has been an ongoing controversy. Amazon being accused of trying to block unions and worker rights and their treatment, at Amazon, pretty much a theme in companies this size. Walmart went through this as well, where Walmart employees were said to not being given competitive pay or their work hours or expectations. Amazon's going through it as well when they get to that size. And of course they are pretty much pricing, their model is lowest price possible. And how do they achieve that? Well, pay as little as possible to get things done. There's pros and cons to this. We'll see it play out. But of course, Amazon has in the past, taken harsh steps when this has occurred, and of course they're moving more and more and more to robotics in the warehouse, which would mean fewer and fewer jobs. So there's a fine balance to be found here, and obviously it's got to be fair for the employees, and Amazon's got to find a way to fit it into their business model. So hopefully there's a solution that comes out here, but it's an ongoing battle, and we'll see how the votes go this week. Lululemon's expected to post a fourth quarter revenue increase. No surprise at all. Obviously people staying at home. I've mentioned a few times. I think I have to go make a donation to my dry cleaner. I've not put on a suit since last March. And a lot of people move into comfy clothes or more relaxed clothing, of course, working out more at home. So no surprise, Lululemon would be a beneficiary of that as people buy more of their, whether yoga pants or sweatshirts or just anything comfort oriented. More top news, the global banks face a bunch of losses. So this is after a hedge fund kind of defaulted on a bunch of derivative bets. So Credit Suisse and Nomura are facing billions of dollars who backed those derivative bets for them, as they take those losses. And we're probably going to see more of this unfolding. A lot of times, I'll mention in portfolios that we put in hedges, but there's a difference between a hedge versus, what's typically known as hedge funds. We generally call these ledge funds in the industry, which the L stands for leveraged hedges, meaning they will take multiple times the bet on the equity that they're managing. So if they have $100 million, they'll go borrow $300 million and bet $400 million on a strategy. And if it goes wrong, if it goes right, the leverage works great. You get big multiple return on your the $100 million investment because they leverage it up. But if it goes wrong, of course, you take multiple loss because you've got to pay back that $400 million first before you get your $100 million out, and obviously you don't get your $100 million out in a lot of cases. And we've seen this in the past where the ledge funds or hedge funds have taken bets, and then markets have pulled back in certain areas. And because they use derivatives as well, which is another form of leveraging your capital against the kind of the strategy that you're putting into the investment portfolio, we can see with the pullback in technology in certain areas of the market, as those things unfold, the longer that pullback goes on, more and more of these strategies will unwind, and some of the big investment houses globally will take a loss where they've backed those bets. So we'll continue to watch that unfold. And as always, be cautious. Do due diligence if you're going into a ledge or hedge strategy. It's far different than buying a little bit of gold in your portfolio to hedge against inflation when you actually own just one time that underlying gold strategy. It's not like you leverage that gold strategy 4, 5, 10 times over. If you own 1-to-1, it's just that's a true hedge as opposed to some of these hedge funds that will leverage things out. Pfizer and Moderna vaccines have proven or are proven, continuously proven to be highly effective after their first shots. There's a lot of controversy about when to get the second shot. Canada's taking an approach of a slightly longer for the second shot, but it's still proven about 80% effective in the first 2 weeks, which is good because, again, if we can just slow down the contagious rate or the transmission rates, we can slow the whole thing down. J&J CEO pay has irked some investors. Not a surprise. J&J CEO and some executives took a hefty pay raise for 2020, despite facing billions of dollars. In fact, they settled most of their opioid crisis lawsuits last year, but there were a lot of earnings, shareholder earnings that went out to pay those settlements last year, and then they take a big pay raise, pat themselves on the back for the vaccine. but forgetting, the money that was lost to the opioid crisis. So some investor controversy around that, but that's always the case, especially when there's a big disparity between a lot of people being, out of work, and then CEOs taking big, huge pay packages. Not always the wisest thing to do. Visa moves to allow payment settlement in cryptocurrency. So Bitcoin back in the news. Of course, Tesla is now saying they'll take crypto to buy a Tesla. Visa saying that they're going to accept crypto to pay down your Visa debt. So obviously more growing, we've got acceptance. I don't know if that's the word I would use. Definitely a more growing interest in using cryptocurrencies in mainstream financials. This just opens up, I've talked about it before. We have a whole video on cryptocurrencies, the concerns of governments and central banks around the lack of transparency behind the cryptocurrencies. And both these scenarios are a perfect example of money laundering. We actually saw this. There was I can't remember, 5-6 years ago, there was not a scandal, but a situation with Amex where international buyers were coming to North America, buying up artwork on their American Express, say paying hundreds of thousands of dollars, say $100,000 on their American Express to buy a piece of art here in North America, paying it off in their home country, and then selling the piece of artwork here, maybe even at a loss, maybe for $90,000. But now they have that sale as a legitimate transaction here in North America. They deposit that $90,000 into the North American financial sector, and they have basically cleaned that money. So crypto is the exact same thing. Someone can have money through illicit means anywhere in the world, rack up a Visa here in North America, pay off the balance, and then return or resell those goods, and now they have cleaned the money. And it's the same with the Tesla situation. Buy a Tesla, resell it, probably at a slight loss, but you would still be able to move money into the financial sector here. So that's a big concern, of course, of governments and financial systems. So, the more and more I think cryptocurrency moves into mainstream, I think more and more we're going to see the regulators try to take some sort of steps to rein it in. So we'll keep an eye on those things. Boeing just won their biggest order for the 737 MAX since the lift of the ban on those jets by Southwest. Ordering 100 new 737. These jets were touted as one of the best, most fuel efficient new planes to the market prior to, of course, the two crashing horribly due to technical and training flaws. Now that's been, let's call it fixed, repaired, cleared, and new training in place, of course, it's making a resurge back into the market as airlines are continuously looking for more fuel efficiency in their fleets. In Canada, BlackBerry is expected to report a fall in the fourth quarter revenue. Well, the first question I'm sure I'm going to get on this one is, really, BlackBerry still around? Yes, it is. The mostly software company, they did see a slowdown for one of their software products, QNX, which is a car software. But yes, they're still around and they're still operating, but not obviously making the hardware that they once did. For us older folk who remember carrying a BlackBerry around with its keyboard. Canada is also going to require new assessments of AstraZeneca. I mentioned this a bit earlier. And I know Ontario and BC have just put a restriction that AstraZeneca will not go to those under age 55 as they do some more tests on its effectiveness and potential risk around people of younger age. Again, from what I've read, this was brand new yesterday. It wasn't really around the blood clotting. It was just more around the effectiveness. But we'll keep a close eye on kind of what those new tests and changes might happen there. And I think we talked about this last week, but Rogers and Shaw, of course, are moving forward with their merger. It's got to go through all the competition reviews to make sure it's good for Canada. I actually don't see that they're going to stop this. The big thing is it's really not around the cable provider side of things. It's going to be around the mobility side of things. Canada was in the process of trying to sell some more cellular spectrum. So they sell that at auction to try to get a fourth major carrier in Canada, because right now the three major carriers are Rogers, Bell, and TELUS, and they were hoping for a fourth. Of course, Shaw through I think Freedom Mobile was making a venue that it was a pretty regional discount offering, not really considered one of the majors, but could have they expanded it out maybe. So I know the Competition Bureau is going to take a really good look at what that means, but all in all, I think the general consensus is this merger will go through. I think overall it's good. If you followed kind of my view on the telecom industry in Canada as far as investments go, I was always more bullish with Bell and TELUS because they'd already spent a lot of money on their fiber networks across Canada. They were very strong on that front. Rogers was spending a lot of money, but they had a lot more to spend, and Shaw had a ton of money to spend to be really competitive in that market. Obviously, bringing their resources together, that's only going to enhance their ability to be a third real national competitor. Because if you live out east, you probably didn't deal with Shaw very much, and if you live out west, other than cell phones, Rogers. You really weren't using them probably for your internet, home security, cable packages or anything like that. That was really an Eastern thing. So it makes a lot of sense for them to join. Obviously, we haven't seen any big reports yet on what that means for jobs. They've committed, I think it's a 2 or 3 year process of not cutting any major jobs, but there's always cuts when you bring two big companies together. But at least regionally, there wasn't a lot of overlap between these two. So all in all, probably a good marriage. We'll continue to crunch the numbers and see what that new entity would look like and see how it's going to compare as far as an investment, putting it up against TELUS and Bell going forward. On the foreign exchange front, the US dollar moved slightly higher, mostly on that infrastructure investment. So, as I mentioned, $3 trillion into infrastructure means more jobs, means good things for the economy. If they get the spending right, we have not seen what that plan is yet. So a little bit more strength to the US dollar in that process. So we'll keep an eye on that. As always, the theme has been the trend of the US dollar down. Again, some good news here to prop it up a little bit, but they are taking another $3 trillion in debt. So, that's going to probably have an impact on it in the longer run. The 10-year Treasury, the new forecast is for it to hit 2.2% by the end of 2021. Now, if you remember, if you do listen on a regular basis, I did mention that the mid 1.8 is where we're really going to start getting concerned on inflation. So if by the end of 2021, the call is for 2.2, that feeds right into the thought process that early 22, we're probably going to see those interest rate hikes. So we'll see how this forecast goes, but it is pretty much in line, kind of in what my thinking has been for the last 3 to 6 months. We'll see if me and BNP are right. Drivers of the recovery include herd immunity from the vaccine rollout. So, again, this just goes to more and more people being optimistic, more and more people getting out there, to reinvest in the economies, reinvest in reopening things, especially in the hospitality network. And we've seen a rise in fiscal deficit to almost $3 trillion, or 14% of GDP. So, we need to turn that around. And the good or bad news, it looks like the US is going to hit herd immunity before us. Obviously an aggressive vaccine rollout, but also more of their population already got it. So herd immunity is partially vaccination and partially those who have already recovered from it. So maybe they're going to get there faster due to their, call it mishandling or different handling, if you will, than most of the world did. But of course, their percentage of deaths were dramatically higher and tragic. So probably not the route I would have wanted to go anyway. The Federal Reserve quantitative easing is been supported very well of 120 billion in monthly asset purchase for 2021. So they're continuing buying up those assets, about 7.5% of GDP, just to support the economy, support the quantitative easing, and of course not using interest rates to offset inflation. On the oil front, as I mentioned, we did see it go up. Partly due to demand slightly returning, the evergreen, or sometime in the press was being called ever given, blockage of the Suez Canal. A lot of oil shipments going through there, as I mentioned, from the Middle East. Not so much overseas here, not really affected too much of North American inventories, but we did see it uptick a bit at 65 and 61 a barrel. So over that $60 mark, where other than last week, it's been pretty much holding all this year. And we're now turning to another OPEC plus meeting. Of course, OPEC having very regular meetings with not just the OPEC group, but the OPEC plus group, as they're still monitoring production very, very closely, trying to keep the supply in check with demand, just to make sure they don't drive that price down too quick or too low, that they offset some countries where they can't afford it. So now let's take a look at innovative technologies, or sometimes I mention disruptive technologies. It's estimated that over the next decade, we're going to add $90 trillion to the equity markets, just in appreciation, and about half of that is expected to come from those disruptive technologies. So you've heard me talk about disruptive technologies before. It's something that's been around for a long time. I mean, Uber and Lyft, rideshare programs would be a very disruptive technology into an established sector, an established marketplace. They brought in new technology, more convenience. A lot of people, enjoy the ease of use, and they revolutionized things, good or bad. They did, and we're constantly seeing that all the time. But what the pandemic has done has really driven this to the forefront, because when we did shut down the economy basically for a year, it made a massive shift. Where industries can use technologies, whether to be more efficient, to get access to new markets, or even just introduce new products or new ways of bringing product to people. We Skip the Dishes and DoorDash, the food services and Uber Eats, all existed pre-pandemic, but they've blown up through that because of the pandemic. After we reopen, knock on wood that we do reopen, are we going to change habits? Restaurants shifted their model. They have the meal kits, they have the drink kits. Regulation changed to allow these different things to happen. Some of them have been already been made permanent. So is this now disruptive? Not many restaurants now still run their own delivery drivers. They'd rather just sign up with one of these services. So completely changed how that happened. And some restaurants who didn't want to spend the money or didn't think that that would be a core part of their business, delivery, have shifted that way. And I probably mentioned in the past, I've talked to a lot of these restaurant owners, and they're really rethinking their model, because during the pandemic closures, yes, they saw revenue drops, but with the delivery services, they actually saw revenue stay the same or increase, because they got rent subsidies, so they weren't paying as much rent, and they realized how much the square footage and staff in the square footage was costing them versus how much they could still make, or how much they could supply through the delivery services. So disruptive technologies are there. I think we fast-paced them. It was a tectonic shift in the economies around the world to really lean on different technologies to change how we do things. And this does not by any means encompass every innovative technology. One that came to mind that's not in here is nanotechnology, or different computer, what are those ones called? The quantum computer systems and things like that. They're still really early stage. What I'm focusing on are really kind of the core ones that are there to invest into today and tomorrow, and are actually growing dramatically. So right at the core of innovation is data. You may have heard this. Data is the most valuable commodity in the world today, more than oil and gold and all these other things. And you won't find a single company out there today that is not trying to, and you use the term, mine their data. So they have a lot of data on their clientele, they have a lot of data on their marketplaces, and they want to take advantage of that. Whether that's a simple matter of, you go to the grocery store and then figuring out what you buy, not just, hey, you like to buy that particular product, but what other products do you buy along with that? And then they can see, do a lot of people do that? Then they can target their marketing from one product to the next, or much like when you're watching, when I watch Netflix, one of the first category suggestions for you based on what you watched previously, right? So it's all taking a look at that data that they own, and how they can better use it for themselves. And you can even branch that out. We've talked about it before. There's even lawsuits going on about it, of course, with the data collectors out there, the Facebooks, Googles, that track your movements, the apps on your phone, where you go, what your habits are. My phone, very easy to be able to tell, my age group, where I live, what my shopping habits are. There's apps on there that every time I open one, it knows where I am. Maybe it knows what I'm buying, or at least what store I'm in. They collect all that data and they mine it. So that's at the core of all this. So more and more data collection and more data use. So what does that mean when we go a tier out? Well, cybersecurity, big theme of mine for a long time. Only a growing theme going forward is, how do we secure all that data? How do we keep that safe? It's constantly evolving. So I think that's a huge part of investing when we talk about innovation, because it doesn't matter what industry you're in, if you're using technology or data to be disruptive, to be innovative, you need to secure that. Secondly, you need to store that. So the cloud, right? No one, or not many companies these days, are storing things on servers in closets in their buildings. It's all in the cloud. So external servers, outside locations, secure, cheaper in a lot of cases, because they don't have to be kept in real estate that's very expensive. They can be in areas where real estate is cheaper. So cloud data is another area to invest into. Companies that provide those cloud services, like Amazon and Microsoft being big names, but there's a lot of equipment manufacturers in there. And you also have a lot more different names in the cloud environment. And then how do you move that data? So 5G expansion has kind of been put on the back burner a little bit through the pandemic here, just simply not being able to get more towers and more expansion out there. But 5G is the next stage. It's massively faster than our current levels. It can move way more data, obviously way more efficiently, which ties into going from those cloud databases to where you need it. So very important area to invest into. We branch out from there, robotics and I don't know, sorry, miss it up there, automations. So, robotics are far past the stage of those mechanical arms putting a screw on a car in an assembly line. We're now into, if you've ever watched a documentary, we talked about Amazon using robotics in their warehouses. picking the packages, putting them on pallets, putting labels on, delivering them into the delivery trucks and out the door. A lot of times these processes are happening without people. They're moving to drone technology to deliver your packages, electronic self-run vehicles. When we talk about robotics, we might not be to that walking around talking to you stage, but we are moving further and further ahead, and more functions around robotics are happening at a much faster pace. So really interesting area to invest into. Blockchain. I'm not necessarily talking about cryptocurrency. Blockchain, if you follow crypto or how crypto is actually done, blockchain is actually just a system of kind of a ledger or record keeping, data management, basically. It is expanded more and more. Of course, it's used in cryptocurrencies. NFTs is the latest thing. These art, electronic art sales. And keeping track of those, a lot of controversy, and it's very new around that arena. But many Walmart, for their inventory controls, are moving to a blockchain, or at least been exploring into blockchain technology. So it's another area of managing all this data. Genomics. This is an area around healthcare. In fact, our vaccine, the mRNA vaccine, that technology, the reason why we got the vaccines so quickly is because, that research or that science has been around for a long time. It's for a decade. And they were just at the point where, hey, we can apply this to a vaccine, and where that goes from there. So a lot of work around biotech, is around genomics and in how we can apply that to our healthcare, and improving medicines and treatments, in a massive growing area. Again, an area that I've talked about a lot: automotive innovation. So electric vehicles, or it could be hydrogen vehicles. The autonomous vehicles would go in with the robotics, but a huge area of growth that should definitely be representative in a portfolio if you look at innovation, and I'm going to touch a little bit more on that. The e-gaming area. So a lot of us think about video games as the console, the Nintendos, the Ataris, but this has massively changed over the last decade even. Yes, there's console gaming, but actually you'd be surprised, console gaming is a very, very small part of it. There's streaming, there's Twitch, there's your mobile gaming. The amount of revenue that comes from your handheld devices, people playing on the go, is impressive. And we'll take a quick look at those numbers here today as well. So when we talk about these different areas, what type of companies? Well, cybersecurity, we've got FireEye, Checkpoint, Fortisnet, Proofpoint, Palo Alto, Fastly, Zscaler. It's grown every day. And in fact, most companies don't have their own internal cybersecurity. They hire outside companies because it's too hard to staff. It's too hard to stay on top of everything that's going on out there. So a great area of investing because it's mostly third party, outsourced investment for companies. So they just spend a lot of money on hiring these guys. On the cloud front, I mentioned Amazon, Alphabet, which is Google's parent company, Microsoft, Oracle, Salesforce, Intuit, ServiceNow, Shopify, Zoom, all out there providing cloud services if you're looking for ideas. Automotive, of course, Tesla, NIO, Ceres Power, more the battery side, Maxline, Fuel Cell Energy, which is using organic gases to convert to electrical power, Microvision, Plug Power, Umbrella, and ITM Power. Again, if you follow, I'm not so much on the top two there, which are the manufacturing names. I tend to focus on supply chain, the parts that go into it, so that's in there. E-gaming, you might have heard some of these names: Activision, Blizzard, Nintendo, Ubisoft, Nexon, NetEase, T2, EA, Electronic Arts, NCSoft, Bilibili, Robotics, NVIDIA. Probably heard of NVIDIA if you have any family members who are gamers, because they're the leader in the graphic design cards. But those chips go a lot into the robotics and automation. The very powerful chips, Fanuc, Intuitive, Intel, of course, is in there, Emerson, Keyence, AMD, and Microchip. On the blockchain front, Bitcoin's there, Argo, Hive, Galaxy, Marathon, Riot. Probably not your average household names, but they're out there building bigger and bigger and more effective blockchains. Legenomics, Beijing, Seagen, GenMed, BioNTech, Corteva, Bristol Myers, Healthcare, Celltrion, Illumina, and Agilent Technologies. Again, not the ones that are coming out necessarily with the vaccines, but they're behind the science that's there. And 5G, Verizon, Deutsche Telekom, KDD, Vodafone, Samsung, Sony, SoftBank, Mobile, and Qualcomm. So those are some names to look at in each of those categories. I do kind of want to look into a bit more. So, these are the good guys. There's a more broader list of names when we talk about in the cybersecurity front. It's not a small market, and it's growing all the time. So it's well worth having in the portfolio. When we look at the cloud computing, again, it's much bigger than that short list that I had before. When we look at the vehicle side of things, I've talked about this before. Countries that have already put legislation to ban gas and diesel vehicles, new purchases, India 2030, Germany 2030, Britain 2040, France 2040, Norway 2025, China starting in 2030, not a complete ban, and Netherlands 2025. We've got California moving to, at least in their state, put a ban in at some point, and also pushing the federal government to put one in. Quebec, as I mentioned in the past, has already put one in. I think it's 2035. So more and more are moving to the electric vehicles or efficient vehicles outside of the gas and diesel. And when we talk about the future of cars, here are just, more list of names you can look at to put into the portfolio beyond that short list there that I had earlier. We talk about e-gaming. I just want to talk on this because it is a massive industry. It is bigger than, I think, football, hockey, and baseball put together in North America as far as total dollars spent. It's broad range between sponsorship, competitions, broadcast platforms, Twitch and ESPN being at the forefront of this, YouTube as well up there, event organizers, and then the games themselves, like the producers of the games, people buying them and streaming online. We don't see so much anymore people buying those CD-ROMs, but it's a massive market. And I'm going to move my little talking head here for you. But $165 billion industry last year. It's just huge. And, we're seeing, if you look at the top of my graph here, if you're watching video podcast, VR and cloud is just starting to break through it. Mobile, 85 billion of that. $85 billion is going into people playing on their phone. 40 billion, just in the kind of the PC arena. The arcades, of course, going by the wayside, and consoles, holding their ground, about 33 billion. They haven't really grown a ton in the past decade or so as far as a percentage of the market share. They've maintained a percentage of market share, but they haven't grown. The biggest growth has been on PC and mobile. But that's not to say, as I mentioned, VR gaming is only new, and it's just starting to break into market share, and cloud gaming is growing every day. And just some names around that. I'm going to move my little talking head again here, if I can. Oh, I'll just leave it there. Oh, there we go. there's a lot of game designs, manufacturers and producers out there to take advantage of. So with that, do I have time for a question? Oh, I've gone really over. I've got one question. I'll reach out to you. I'll get you an answer on that. I've gone talked too long on that. As you all know, I love innovative and disruptive technologies. It's been something that we've been investing to for a while, especially in the cyber front and the car front. But even more so than that, I think, and I believe, as we've seen it, so much so in the last year with the pandemic, having made the market and industry make a massive shift to using these even more and more moving forward. So with that, I'm going to say thank you. Go to mikeonmoney.com if you have any more questions or any more ideas you like me. If you'd like me to take a deeper dive in any one of these sectors, I'm happy to do a video on that. If you have more questions on it, I'd love to dive into those as well. But with that, I'll let you go. Thanks all for joining me. Talk to you soon.